Look, it was an interesting update yesterday. Brookfield and EIG appear to want to proceed with the takeover offer of Origin, only reducing their offer price by 10 cents per share down to $8.90. It's still non-binding and indicative and subject to further due diligence, such as regulatory approval by FIRB and the ACCC, commodity hedging and board approval. So clearly the buyers don't appear to think that there is a materially different risk profile despite the much more severe regulation overhanging the gas and the LNG industry. The proposed price is split between AUD and USD amounts for larger shareholders and suggests a 48 to 52% split in the perceived value between energy markets and the APLNG stake. It's interesting to see that the market is still including a risk discount with the stock sitting at $7.90. So I guess the question is, what do you do from here? So there's a 13% potential upside up to that $8.90 bid price, which is adjusted for future dividends, obviously. And the deal needs to close by 30th of November to avoid the ticking fee. So potentially in 6 to 9 months' time, you could realise that 13%. But judging the risks, the regulatory risk is probably the key thing here, is a pretty subjective exercise and somewhat hard to predict. So I think the biggest challenge there is the FIRB approval. It looks to me that the deal is well over the monetary threshold where the Treasurer potentially gets involved. The acquirer is a US company, so from a national security point of view, it's probably not really an issue there. But given the focus on the gas industry, there is potential that the government could prefer that Origin's assets remain in Australian hands. On the other hand, though, if the government is going to ram through that pretty aggressive code of conduct, then maybe that point is moot. Maybe the government might feel that it has enough influence over price in the gas industry. It doesn't really need to get involved in the takeover.